Okay, we will go ahead and get started. Welcome to today's Lunch and Learn presented by Virginia Community Capital. I am Melody Short, Community Innovation Advisor, and I'm excited to have you all join us today to learn more about small business lending and ways in which you can set your business up for success. I'll be sharing some valuable information with you at the end of the session regarding our Economic Equity Fund. So be sure to stay with us until the end to learn more about an immediate resource that is available to you. But before we continue, just a few housekeeping rules. We are recording the webinar and we will send the link to all that registered next week. If you have questions, please submit via the Q&A feature at the bottom of your screen in the toolbar. We ask that you don't submit it via the chat just so that we can manage the questions and get them answered for you. Again, the Q&A feature is a toolbar right at the bottom of your screen. We encourage you to drop your questions there and we will start answering those questions at the end of our session. I'd love to introduce our first guest. We always like to partner with other organizations within the small business ecosystem that are doing the work to support our small business community. And so we're super excited about the opportunity to create this event in partnership with the Office of Minority Business Development. And so we have Laquiana Bailey joining us today. Q, if you can give us just 1 or 2 minutes of your time to share what resources are available through your office so that those that are joining us today, if they are not familiar with the Office of Minority Business Development, they become familiar and have a good handle on what resources you all have available for the small business community.
Yes, and first, thank you for having me. So I'm Laquiana Bailey, also known as Q, and I'm the program manager for the Office of Minority Business Development. And our core role is to provide business development assistance to individuals who are either already in entrepreneurship or looking to step into the entrepreneurship world. And we do that through a variety of things. One, we primarily do a lot of business consultations. So I sit with you for a period of time to kind of discuss your vision and what it is you're trying to accomplish and which ways that I can assist you with making sure you meet that goal in entrepreneurship. We also partner with obviously sister organizations such as VCC and our community innovators such as Melanie Short. And so we do that to where we participate in different types of webinars and seminars. We also host various classes that are available to current entrepreneurs and up and coming entrepreneurs to kind of help them with enhancing their entrepreneurship knowledge.
Thank you so much, Q. We really appreciate you joining and sharing. And without further ado, I'd like to introduce Chandra Hurst, Economic Equity Small Business Loan Officer. She'll be our featured speaker today, sharing ways in which you can prepare for a small business loan as an entrepreneur. Chandra, the floor is yours.
Well, good afternoon, everyone, and it is my pleasure to be here with you all. I am excited that you've taken the time out to learn some cues and tips, and I hope you could take away some good nuggets that will help you prepare for your lending opportunity. So we can get started with the presentation.
Chandra, I'm working on your presentation. It's freezing up on me. Give me 1 second.
Okay, no worries. No worries. But again, I've already mentioned I'm Chandra Hurst, Economic Equity Small Business Loan Officer with Virginia Community Capital. And I'm not quite a month on the job, but have experience in the industry, having been in the banking industry over 29 years. And like I said, excited to be with you all today. So we can go on to the next screen. Before we get started, just wanted to make you aware of VCC's values and missions. And as you can see from the diagram, vibrant communities are in the center of everything that we do. Our vision is to be the first choice for innovative capital and collaborative leadership, promoting vibrant local communities, enhancing the quality of life. Our mission is to support housing, community development ventures, increase jobs, and build sustainable communities by offering flexible financial products and advisory services. We can go to the next screen. Again, VCC has 3 suites of services that we use and we share: lending, advisory services, and investing. Today, we'll focus on advisory services, but I did want to bring your attention to the lending opportunities because that's what we're going to be talking about today. So we provide real estate financing opportunities, affordable housing, small business, that's my space, healthy food, and clean energy. Next screen, please. And so VCC social impact. For over 15 years, VCC has made an indelible impact in the community with $1.8 billion in total impact. And that's a little over 7 million in loan originations, which equates to a total of 954 projects. You can see we've generated about 12,000 jobs and almost 10,000 housing units financed. And you can see the list of some impact that we've made over time. So just wanted to provide you with some insight into what VCC is doing. Next slide, please. And then our agenda for today, we're going to cover debt versus equity financing, preparation, your valuable business, budget, projections, and analyzing credit requests. Next. So we're starting at your budget. Your debt versus finance. So debt defined terms for repayment regardless of performance. So historically, this is a promissory note where you agree to pay your loan, which is typically a monthly obligation. It's typically a fixed payment. So regardless of your performance, we're looking for that payment. Then we're looking at collateral. Sometimes you'll offer collateral for the deal. In most cases, you will provide collateral. And that's something you pledge for the security of the repayment of a loan. Some cases that's real estate and maybe an equipment, accounts receivables, or an auto loan or something if you're buying a car for your business. Then we're also looking for guarantors. You as a borrower will be considered a guarantor. We want to make sure that you have skin in the game, that you're invested in your business. And then, so if you can't pay your loan, because like you said, it's repayment regardless of performance, we're looking for you to step in and make those payments from your personal income. And that's why we have that guarantee there. Of course, this lending is typically conservative because again, we have you cash flow to make the loan payment. We have a secondary source of repayment, which is your collateral, and a tertiary source, which is you as the guarantor. And also we borrow the money that we lend to you. So we may go out and borrow it at 2% and lend it to you for 5, so our spread is 3%. So that is considered low risk and low return. Then you have the equity lending option, which is the owners and share in profit and control. Again, your ownership may vary. You may have an angel investor, or someone else that's investing capital in your business. Keep in mind that you may limit some of your control, but again, that is the equity financing option. There's no recourse. If your business fails, there's no source of repayment there. That's typically considered high risk and high return. The risk being if the business doesn't do well, you lose your investment and your capital into this project. But if the business is thriving, you have a high return and the sky's the limit with regards to that. Next slide, please. Now, what we look at for your viable business, for new businesses, these are the documents that you'll want to collect. You'll want a project budget, and we'll speak a little more about that later on in the presentation. We want projections. Want to spend some time on the business plan, assumptions behind your project, market assessments and sales plan, and management plan. So your assumptions, for instance, an example may be, you're coming out the gate, you've got a great business plan, and your business plan is your blueprint for your success for your business. So your assumption may be, I want to have a gross sales of $1 million in my first year. Well, how are you going to get there? Have you done any industry research? Have you collected data to know what your demographics are going to look like? Your market assessments. Who are you targeting? Who's your target audience? What is your industry trends? What is your price point? Are you going to be competitive? And then your marketing plan, your management plan, I should say. Who are your owners? What is your structure? Going to be an LLC, a sole proprietor? And then who are your board of directors that are going to be arm's length from the business that can give you an objective advice as you move along in this process? And then proof of concept. Has this business plan been been developed before? Are there similar businesses in your industry that have this concept? And again, what are some pitfalls in the industry? And what are your mitigants that you have that's going to differentiate you from your competition to make you successful? So all of those things go into you as a new business owner when you're starting to look at your proposal in your business plan. Next slide, please. Now for our existing businesses, what we want to see and have you prepare as you come to the bank for a loan request. We want 3 years of business tax returns. This is critical that you have a CPA that's working very closely with you to ensure that you have a revenue. We do not want to see a negative value here or zero. Again, we repay loans with cash flow. So we want to ensure that your business is profitable and you have displayed that via your tax returns. Also for a nonprofit, we're looking at your 990s and then your most recent interim financials. The first of which is your balance sheet. The balance sheet shows us a clear statement of your assets and your liabilities at a period of time. This tells us how much money you have and your liabilities. We take a look at that because of your heavy leverage on debt and your liabilities. We want to make sure that you have the cash flow to support this new loan request. And your profit and loss statement, also referred to as an income statement, it summarizes your revenues, your costs, and expenses occurred during a specific time. That's usually quarterly or during a fiscal year. This helps us understand the profitability of your products. What is your price point for goods sold? So all of this data helps us understand your business and the viability of you having the cash to pay the loan. Accounts receivables. This is the amount of revenue that you've earned but not collected. This is monies that businesses or your vendors or that owe you. So we want to make sure, are you collecting those accounts receivables in a timely manner? Are you collecting within 30, 60, or 90 days? That's critical when we make that loan decision. In addition to your accounts receivables, there are accounts payables. These are monies that you pay to your creditors, your vendors, and your suppliers. Are you paying those as agreed? Typically, they want those paid in full on a monthly basis. Are you able to do that and sustain? So those are the things that go in for us to really know that you have the cash on hand to pay the loan back. And then lastly, your background and your history of your business. The more the merrier here. You, again, may have just been in business 3 years, but you've been in the industry for 20. Put all that in your background. If you have been noted and recognized in your industry as being the best or being highly favored, please add that. The more we can know about you and your business plan to substantiate you being able to maintain your business and pay your loan is critical. Next slide, please. Again, we're looking at the project budget. We talked about that early. In this particular scenario, we're looking at a build out of a restaurant. So we want to make sure that this information is highly detailed. You have all of the components in your budget. What we don't want to do is have you miss something and then you have to go back to the lender and then adjust your finance. You want to make sure this is very, very detailed. And as you can see in this particular scenario, there is owner's contribution. We talked about that before. What's your skin in the game? What's your investment in this project? So we know that you are invested. So the owner puts cash into this deal as well. This is also a situation where there's a contractor. Please make sure that you vet your contractors to make sure that they are licensed, they have experience. You can ask them for projects that they've worked on to know that they are the best in the business. Next slide, please. And again, projections. We want 2 years, and we talked about profit and loss statements earlier, broken out monthly. Again, this helps us identify expenses, justify the revenues, and with proof of concept, the experience, the market assessments, and sales plan. Next slide. And analyzing credit. And I really touched on this before as far as repayment. So we look at cash flow. Cash flow from the business is our primary source of repayment. And then we look at collateral to secure the loan. Again, our goal is not to, sorry, I'm in the office and my light went out. There we go. Sorry about that. So the collateral is to secure the loan. We're not in the business of holding real estate or holding your business vehicle. We want to make sure that that is just to support the loan. And then lastly, your personal guarantee is important. And I didn't see this, we didn't talk about this or have a slide in there, but your personal credit is going to be critical to this particular endeavor as well. We want to make sure that you maintain your credit and that you've been a good steward of your credit, because that gives us an indication of how you're going to repay this particular loan as well. Even though the business itself is the borrower and the cash flow for the business is responsible, but we look to you as a guarantor to make sure that you maintain your credit as well. And then in some instances, we use government guarantees to help enhance this credit request. And typically, you know that as the Small Business Administration or SBA. And usually they come into play when there's a project-based deal, where there's a shortfall in collateral, or the guarantor is not as strong as we want them to be. And then we also have the equity, the economic equity fund, which Melody will speak more to later in this conversation. Next slide, please. And collateral valuations. These values here are pretty typical in the banking industry. Sometimes you'll hear loan to value or LTV. That's what they're referring to when they speak to that. In most cases, new equipment, we will typically finance 75% of the value of that equipment. So again, your skin in the game, you will put in 25%, and then equipment 50%. CRE is commercial real estate. That's where you'll put in 20 to 25, maybe 30% there. And the list goes on and on. But I did want to bring your attention to the additional closing costs that's considered with commercial real estate for over $250,000. We would typically want an appraisal on that real estate, and that can range anywhere from $2,500 to $5,000 historically. And then there also may be additional costs with a phase 1 or phase 2. That is an example of that may be you're buying real estate, which was the prior use of that real estate was a gas station. So there may be underground tanks and things of that nature that require a phase 2 because we need to make sure the soil is not contaminated. So when you're looking at purchasing real estate, you want to be mindful of those things. And those phase 1s and phase 2 can really get costly, upwards of $5,000 to $20,000 in some particular cases. So just be mindful of that. Other additional things I want to bring your attention to is business acquisitions over $250,000. They typically require a business valuation. That's where we will have a third party come in and do a forensic audit on your finances, on the finances of that business. That helps you as the borrower as well as the bank, because we are going to make sure that that business, the revenues that they indicated, the success of that business is going to do what we want it to do, and that business is viable. So the cash flow that you generate, you'll have success over time. So you will see that and if you're looking at purchasing a business. Next slide, please. And again, we talked about project sources and use of funds. And you can see where the source of money is with the bank. Again, you see the borrower's skin in the game, and they put a capital injection into the deal. And they display the uses of the funds. They're purchasing new equipment. They're doing a debt refinance with some debt. And again, they include their closing costs. So this is important when you are looking towards financing a project and going to a bank. You want to be clear on your sources and uses of funds. Next slide. And then lastly, your application packet. Again, we talked about the breakdown of your funds. We talked about 3 years of tax returns for the company, and that's all schedules, not just the first 2 pages, but all schedules. And again, we want to see a positive cash and revenues on the tax returns. The most recent financials, including accounts payable and accounts receivables, we want to see that balance sheet and income statement that we talked about prior. 2 years of projections for the business and explanation of projections, and we talked about that as well. We want a buy-sell agreement if you're purchasing a business. LOI is letter of intent. So if you're looking to purchase a real estate in a location or space or lease a space, we want a letter of intent. And then we also want your personal tax returns for 3 years. Again, we want to make sure that you are where your income is there, so we can substantiate you as a guarantor, and also your personal financial statement. This is critical as well. Again, we talked about you investing cash and capital into the project. So we want to make sure that you do have that revenue on your personal financial statement. So make sure you put all your assets and liabilities on your personal financial statement, and authorization to pull your credit. I was a victim of identity theft, so I have a block on my credit report. So make sure you remove the block so we can get the proper credit reporting that we need. And then lastly, if this is a brand new business or startup, we want your business plan. So in a nutshell, that's a lot of information. And thank you for your time. Again, I'm Chandra Hurst, and I think this time we'll open it up for any questions that you may have at this.
Thank you, Chandra. This was wonderful. This information is incredibly valuable. The tools for loan preparedness that you provided today is, I would say, are definitely gems that we all could use to ensure the viability of the business owners, and that they are able to get to financial institutions, hopefully Virginia Community Capital, the documents that are needed to get them ready to be approved for a loan. We did mention earlier, we welcome questions. We don't want you to be shy at all. We ask that you place the questions in the Q&A box. So I am going to go here now to see if anyone has any questions. I think someone was raising their hand maybe 5 minutes ago, but again, we open the floor up for questions. Please don't be shy, because now is your opportunity. We want you to be prepared when you go to financial institutions, when you're seeking a loan. We want you to have everything, all your ducks in a row, so that your process isn't so drawn out and you're able to get, the loan funds that you're seeking. And so I'm going to actually, while we're waiting for our attendees to submit their Q&A, again, using the Q&A chat box at the bottom of your screen, I want to go ahead and take this time to share a little bit about our Economic Equity Fund at Virginia Community Capital. So while I'm sharing, again, be sure to drop your questions in if you have any. And so the Economic Equity Fund was developed, in 2020. Virginia Community Capital actually developed a $10 million loan fund that provides low-cost financing for small, minority, and or women-owned businesses that were disproportionately affected by the economic impact of COVID-19. And so in addition to low-interest loans for eligible borrowers, resources have been allocated to provide free technical assistance and consulting for eligible small businesses and community-based partners. This year, VCC secured additional grant funding to further support the program. And so we're excited to extend the extended benefits to eligible borrowers throughout the state. And we encourage you, and we'll drop the link in the chat to learn more about the fund, as well as the eligibility requirements. We ask that you visit us at vacommunitycapital.org. You will click on our impact and then click on Economic Equity Fund. You can also email me, and I'm happy to answer any questions that you have and also help you to explore whether or not this is a good fit for you. I can be reached via email at mshort@vccva.org. I'll place that in the chat as well. Again, mshort@vccva.org. Please take advantage of this opportunity. It is quite incredible. The interest rate is only 3%. And so again, if you need a capital injection of some sort in your business, if you're looking to purchase some equipment, if you're looking to take on some expansion projects, this may be a good fit for you. Let's see if we have any questions. We do have one. And so the first for you would be, what if my business was strong before COVID-19 but struggled last year? Am I eligible for a loan?
Well, we would look at that as a case-by-case basis, and that is why VCC took an active approach to develop the Economic Equity Fund, because we know a lot of our BIPOC businesses, small women-owned businesses, have experienced the devastation of COVID-19. So we definitely will take a look at that as a case-by-case basis. We will really focus on what your business did prior to COVID, and hope that there are some things that you've put in place to recover. But we do take into consideration how you perform prior to COVID. So we will definitely look at that on a case-by-case basis.
Wonderful. Thank you, Chandra. The next question is there a minimum credit score required for loans at VCC?
Well, again, that's another situation where we'll look at the deal individually, but we typically want to see something north of 650. That's not, and that can vary from different institutions. But again, we do understand that COVID was devastating to a lot of businesses. So we are looking at mitigants to help you through that process, but historically north of 650.
Wonderful. Thank you for answering that. The questions are coming in now.
I know.
So the next question is, okay. So am I correct in assuming that guarantors or sole proprietors who are in active bankruptcy protection do not have any financing options for business purposes?
I wouldn't say no options, but I would say that a bankruptcy would be something that we look at. Again, your credit report is a backwards look on how you maintain your credit, but we would look at what was the nature of the bankruptcy. Was it medically related? Was it just that you didn't pay your bills? Of course, that will give us pause, because we want to make sure that you can pay the loan, and your credit report and the way you've managed your credit gives us an indication of how you're going to perform in the future. So I wouldn't count it out, but it would definitely depend on the nature of the bankruptcy.
Wonderful. Thank you so much for that. Next question. My father and I have a vacant house. We want to use it as a rental property, but it needs major repair. How do we secure funding?
So it depends on whether or not that's going to be for personal use or business use. That's probably going to be a personal loan unless you are securing the loan under an LLC. But it sounds like that's going to be used for personal use. So that would be a personal loan on that particular situation. And you would seek out a mortgage representative to help you with that. But again, it depends on how you're going to use that property. That will determine the use and the right means of financing that.
Wonderful. Thank you, Chandra. I am in the wedding and events industry, which has its highs and its lows in terms of, it being seasonal for generating revenue. How will this impact getting a loan, I guess, with revenue reporting?
Right. So we do take into account seasonality. That's not unusual in the lending space. But we do need to know that in those high moments, you have generated enough revenue to pay the loan. So there are several industries that experience that seasonality. But again, we want to make sure your revenues are enough to pay the loan, because typically, like I mentioned, you're on a loan that requires monthly payments. So in those months where you don't have as much revenue, we're expecting that the month that you have your high months, you won't have enough income, or a cash flow, I should say, to make those payments when those months are lean. So that's not something that we would discount you for.
Wonderful. The next question is, each application is different from the next, but what would you project is an average turnaround time on loans for qualified businesses? Before you answer this question, I will say that's why attending this session is incredibly helpful, because it does allow you the opportunity to know what type of documents any financial institution will be seeking at minimum. So the first step was attending, Michael. So we applaud you for being with us today. And then the details of that answer, Chandra can provide.
So I would say the clock ticks when you have all your documentation. So that is the critical part, to have all your documents in, so we're not piecemealing decisions, and that will speed up the process. I would say, and again, I haven't been here as long, so I'm not sure on the turnaround times, but I would confidently say that we would not give you a slow no. We would definitely get to you as fast as we can. And it depends on the complexity of the loan. If there's real estate involved, you have to get appraisals. But I would say a loan decision, I would think will be, and Joey, you may have to help me with this as my, but I would say, being new to and being in the industry in the past, we typically would have a credit decision if we've had all the necessary documentation within a week. But that doesn't mean you're closing in that time frame. Again, there may be mitigants that we may need additional documentation. If there's appraisals, again, we talked about evaluations of the business. So answer to, and then a final answer, if there's appraisal involved, we will give you a preliminary answer from, there may be additional documentation needed to get a final approval. I hope I answered the question, but it varies.
Thank you so much for that. The next question is, do banks finance startups?
Absolutely. Absolutely. And we mentioned that in the presentation and what documentation you'll need for that. So we do finance startups.
Wonderful. Okay. Let me go to, there's a few more questions here. Okay. What have been, okay. How do you obtain business financing if your business is new and you haven't made any sales yet? So this is kind of an extension to the startup question.
Repeat that question for me.
How do you obtain business financing if your business is new and you don't have any sales to report?
So basically our decision will be based on your projections. Remember, we talked about what your projections are being very detailed. Also, we're going to be looking heavily on you as an individual. So we're going to be looking at how you've performed personally in your credit. What is your experience? Do you know this industry? The example that I provided, you may have been in the industry for 25 years and just decided to go on your own. So we're going to use all those factors to mitigate the decision to approve the loan. But definitely, if you hadn't made any sales, our loan will be made based on your projections and you as a borrower personally.
Okay. The next question is, how do you evaluate raw material, WIP and FGI inventory as collateral in a manufacturing company financing?
So that's going to come into play when we were talking about your balance, your income statements and profitability. So we're going to look at how fast are you turning that raw material into a product that you're going to sell. So that's where that comes into play. Those raw materials, have you been able to transfer those into a product to sell? So that's where that comes into play. So again, that's a case by case based on industry as well. So we would take a look at that for you.
Next question is, I'm starting a retail shop and need funding. What programs can you involve me in to help me achieve success in opening my doors? I will say, and I can jump in. I mean, I think it's just a direct contact to VCC. The Economic Equity Fund that I shared with you all a few minutes ago wouldn't be fit for a startup because we have a minimum requirement in terms of years of operation. But like as Chandra mentioned, that there is room and there is opportunity for startups to be funded. So we just encourage you to contact VCC, and Chandra will share Chandra's email information so that you can make contact if you have any additional specific questions. Can you address how a 501c fits into the startup the financing conversation?
So again, it's the same concept, you're just documentation will be different. We talked about a 990 is your tax return. So it's the same concept. We want to make sure that you have the cash flow, the collateral, and the guarantee. In most cases, 501c, the guarantors are a little different. So again, we would take that offline and we can look at that. But it's the same borrowing concept and the same documentation that's going to be needed for consideration.
Okay, the next question is, are there particular business structures that are preferred?
No, and no, not necessarily. That determination of a business structure, I would say that would be with your attorney, your business attorney, or your tax consultant as to how you want to receive payment. I mean, if you're going to be a sole proprietor, Again, you're going to be liable for any thing that happens. If you're a LLC, that separates you from a liability perspective. But I think that's a decision that you make with your attorney or your CPA as far as your structure.
Wonderful. Next question. Are there any funding options for in-home based businesses?
I think the funding structures are going to be the same. Of course, with COVID, almost everyone's working from home. So we don't differentiate that. We just factor in if there's overheads associated with that, if you are in a brick and mortar. But the concept's the same. The concept of cash flow to repay the loan, the collateral and the guarantor. So those concepts remain the same regardless if you're having an in-home business or if you have a brick and mortar or if you have you're renting space. We just accommodate those expenses in your cash flow to determine if you have that the funds to pay back the loan.
Okay, here is a very specific question with regards to someone's business. Okay, so they say I have a very unique business. I buy, sell, and finance religious institutions. I need to travel to church conventions, like church convention tours, about 30 a year. I have a finance company that is willing to partner with me on the booth costs. I can eliminate hotel flight costs by having an RV. Can I finance this equipment with a loan? The RV. So with that, that's almost similar to the conversation you and I had yesterday. Would this be a vehicle loan or would?
Yeah, I would have to take that offline because I'll have to look at whether they consider the RV a vehicle for your business. So I'll have to take that one offline. I'll have to get more information on that for you. So let's put that in the parking lot.
Okay. And Chandra, give us your email address. I'm going to put this in the chat.
It's CHURST@vccva.org.
Wonderful. Wonderful. I am checking to see if there are any more questions. If there are more in the chat. Let's see. I want to buy a property that has a mortgage. It also needs repairs and it has a lien of $50,000. Can the lien be reduced?
So if you mean the lien wouldn't be reduced unless that was a conversation you had with the seller. Historically, when you're purchasing a property that has a mortgage on it, the seller would give you the price of the property, and whatever you pay for the property will satisfy that lien. So you would have to have that lien satisfied, and I'm sure they will, the sale of the property would definitely incorporate the payoff on that mortgage to make sure that the lien is taken care of and it's transferred the deed in the fashion that we need it to be taken care of, because you won't be able to purchase it without satisfying that lien, because then you're not executing the deed on that. So it definitely would need to be paid off. So I guess I'm not sure as to what you mean by reducing the loan or the property. And that may be another one-off as well.
And we've dropped your email address in the chat.
Okay.
Needs to make contact if they have any other questions. I think the last question that I am showing is, I am starting a retail shop. No, I think I answered that question. There's a question around starting a retail shop as well as a laundromat, but the question is really centered around startup funding again. And so Chandra's email is listed in the chat if you want to talk further and explore what those funding opportunities look like through Virginia Community Capital as a startup. And I think we have breezed through lots of questions, different industries represented, different stages of business, which is always beautiful to have a mixed bag. Chandra, you were wonderful as always. And I say that Chandra's new to VCC, but she's not new to the region, to this industry. And so we've all had the pleasure of working with her over the past, through the years. We thank you all for joining us, taking time to have your lunch with us and learn a bit more as an entrepreneur. We welcome you to make contact with us. Again, we've dropped our contact information in the chat if you have some additional questions around startups, or if you want to, start the process of securing a loan to Virginia Community Capital. Please contact Chandra. If you want to learn more about the Economic Equity Fund, I've dropped my information in the chat, and I will team up with Chandra about your inquiry as well. Just generally speaking, Virginia Community Capital is a local CDFI, and so we are here to do the good work of making sure the small businesses in our local community have the support and funding that they need. So visit us at vacommunitycapital.org to learn more about all of our offerings, to include events that are coming up and also funding resources. We thank you again for joining us and have a great rest of your day.
Thank you.